All right. Well, welcome everybody. Thank you for attending our webinar today. I am Haley Ryapel, and today we're going to dive into some practical, proven ways to raise profit margins in your rental business. So really quick, we're going to send out a survey, and the question is, how are you currently tracking your business's profits? And as you guys answer that, I'm going to go ahead and dive into introducing myself as well as our hosts. I am your host. I am the marketing communication specialist at TapGoods, and our presenters today are Candace Leak and Rebecca Warnick. Candace is our Chief Commercial Officer at TapGoods, and she's founded 3 startups in diverse industries, including the event rental sector. Profitability has been a key metric she's focused on for over 20 years. And Rebecca Warnick is our guest host, and she is a CPA who specializes in working with rental businesses. She runs the Warnick Group and has been working with rental businesses for over 10 years now. So today, she's going to offer some expert insights on some common mistakes she sees made daily that cost profits and how to fix those leaks before they happen. So really quick, I'm going to take a look at our results. I see that 25% of you guys are using spreadsheets. We actually hear this a lot at TapGoods. This is really common for small rental businesses. A lot of the time you guys get started with spreadsheets and then later you kind of wind up upgrading to more robust reports when you need deeper insights. I also see a few of you guys have a CPA, which is fantastic. You're probably getting some great insights, but still thank you for joining us today for some more insights from Rebecca. Um, so without further ado, I'm going to pass you over to Candace, but remember to send in your questions as you listen, and we're going to answer them at the end.
Thanks, Haley. Okay, here's our agenda today. We're going to talk about 8 key strategies to increase profits. And what I really love about these 8 strategies is they're not about going out and getting more business to increase profits. They're about taking the business that you have today and how are the people coming in your door today that want to do business with you and increasing how much you're making from those people. So we have other webinars that we've done in the past on marketing and Google Ads and growing your customers. And this is more focused on what's already coming in the door and how to maximize it. I'm really excited to have Rebecca here today. She is a CPA that focuses exclusively in the rental industry, which I just think is genius. I've never had a CPA that focused exclusively in my industry, and I think that could be so helpful because especially in the rental industry, that's so much different than other industries, and to be able to say, what should this number look like? What are you seeing across the board with other people in the industry? I think that that's super helpful, and I'm excited to hear what she shares with us today. So first, let's talk about cutting operational costs. This is often easier said than done. But it's your silent profit killer, and this is what most people overlook. And poor operations is estimated to eat up on average 3% of profits. So there's 4 ways here, and all of them really tie in with automation and taking manual labor and work out of a lot of parts of your business. So the first one is automate bookings, invoicing and inventory management. This can be done with software. We have TapGoods. There's many software out there, but the main point is, if you're paying someone to create bookings and manually manage inventory on a spreadsheet, you're paying for a lot of time, and you're also it's much more likely to have errors that can cost you business. So if you have special ways that you calculate fees or discounts, or you want certain things to be a certain way, when you automate these things, you make sure that they're being done the way that they're supposed to be set up to keep you profitable. The next one is simplify the customer journey. Now, this goes hand in hand with online booking, and I know that online booking in this industry in particular can be very scary. And it's not about whether or not the inventory is available, it's whether or not people are available to deliver what it is people want. Do you have enough labor on staff? Are you already booked up? But if you can figure out a way, either through a wish list or some way for people to automatically tell you what they want. People want these days to self-serve. They do not want to have to pick up the phone. They do not want to have to send an email. They want to be able to look at your inventory, see prices, figure out what they want, and self-serve. So it's the experience that the customer wants, and it also reduces the operations on your side. The next one is optimizing deliveries with route planning and driver performance tracking. So manually scheduling deliveries and routing is a major time suck. And it's horrible when you get it all figured out and then someone calls and wants to change their time and then you've got to redo the whole thing. But if you have software do it for you, it can automatically optimize it and make sure that you're making the most of your driver's times. Because I know with rental companies, especially when you're growing quickly, labor is really the biggest problem. It's the hardest thing to manage. So anything you can do to help manage that and make sure it's optimized is going to save you money. We're going to talk a little bit later about reducing loss and damage with pre and post rental inspections, but that's something that's quite common as well. I think when you get busy, that's something that you're just trying to get orders out the door. Maybe they're coming in and out so fast that something that gets missed is just regular maintenance. So making sure that that's done as well. We're going to talk about that as well. So every dollar saved here operationally goes straight to your bottom line. So if you aren't using TapGoods or another software that can do this for you, you really aren't making as much money as you could be making. It may not be, if you're just getting started out, maybe you don't feel the need for it. But we have software and other companies have software starting at $19 a month. So getting something that makes it some of this stuff automated for you really is not that expensive and helps you keep everything, reduce your error rate. Okay, this one I love. So this is smart pricing. There's several levers that you can pull here. The first thing I'm going to talk about is actually at the bottom of this slide. We created a calculator that helps you figure out how to price your items. So actually, let me say this. I just want you to pay attention. This is a minimum rental price charge. So you input the cost, what you paid for the item. So in my example here, I input $1,000, and then the markup that you want, and the industry standard is 75%. So you would input 1.75, and often the item will rent. So for this item, I said we're going to rent it 25 times a year. Now, some items you may rent every single weekend, multiple times a week. Some, if it's like a great big huge tent, maybe you only rent it 6 times a year. But that matters to when you're talking about what's the minimum price you should charge. So I know a lot of rental companies may just start their pricing based on what other people in the market are charging, but other people in the industry may be losing money. And you can still compete. You can compete on quality and longevity of your business, have those customers returning. So starting with a minimum rental price is great and so important. So I did touch on competitors and don't undercut them blindly. Make sure that, they're not losing money and you do want to be competitive, but that's not the starting place. Start here and then look at competition because you also may find that your minimum rental price is much lower than what you can get. So doing the competitor research is important. I'm going from the bottom up today, but the next one is the 28 billing cycle. This isn't as prevalent in party rentals, but it is for tools and equipment. This adds one more billing cycle to your year, and it also offers consistency in pricing if you have monthly prices. So you don't want to have to worry about 1 month having your items out for 31 days, and that's the same price as another month they're only gone for 28 days. So with the 28 billing day cycle, if you're renting stuff on a monthly basis, that actually adds an entire billing cycle to your year and can make a significant impact on profitability. The last one is adjusting prices based on demand and seasonality. This one gets missed a lot because if you don't have software or a good way to management, it's really, it can be quite cumbersome to try to keep up with it. But let me just give you an example. Let's say you rent casino tables. So most likely your busiest night of the year is New Year's Eve. You should have a much higher price on New Year's Eve than you have on any other night of the year because your demand is much higher. With that in mind, you could also have season rates that take advantage of the slow season. So I know an inflatable company owner, and during their slow time, they will rent an inflatable for an entire weekend, which during their busy time rent is a 4-hour price. So they'll say get the whole weekend for a 4-hour rate. So then they have people like me, and I have kids, and I'm like, you know what? That's not a bad price, and I have it for the whole weekend. We can have some friends over, and I end up renting an inflatable when I wouldn't otherwise rent it. So really watching demand and seasonality and tracking that and adjusting your prices accordingly can make a big difference. Okay, let's talk about boosting inventory utilization. So, this is getting the most out of what you already own. And I don't know about you guys, but math was not my favorite subject. And so when I look at things like utilization rate equals days rented over days available, I'm kind of like, yeah, so what? What do I do with that? I just want to know, like, the bottom line. What do I do with it? And so, what you're looking for here is that your utilization rate. So, this is a simple formula. How many days do you rent it? How many is it available? If it is below 30%, should probably consider selling it. You want to invest in multi-season and multi-use items. And with this last note here, review people what people actually request before buying more. In my conversations with Rebecca, I know that she recommends, and I love this idea, keeping a spreadsheet. Make sure people request an item 3 times before you consider buying it. And just because they request it 3 times doesn't mean you're going to go out and buy it. Then you got to do all your homework to make sure it makes sense. But don't just willy-nilly go out and buy things because one person said that they want it. So I do want to note here when we're talking about utilization and the 30% rate, kind of just a rule to follow. There is an exception, and it's a really good exception when it comes to marketing. It's called a loss leader. So you'll see this a lot at grocery stores. So they'll run a splashy sale and they may have like buy a milk, get one free, or eggs are $1 this weekend, which actually would be amazing since eggs are like $7 now. But let's say they're $1 this weekend. So they know that they're going to lose money on the eggs, but they also know that you're going to come in and you're not just going to buy eggs. They're probably going to have a limit on how many eggs you can buy. So you're going to get the one egg, then you're going to fill that basket up and they're going to make money. They're going to make money off you. And that's their loss leader to get people in the door. So you may have some items that have a lower utilization rate, but you know from looking at your reports that those particular items lead to bigger orders, and it may make sense to keep them. So really everything we're sharing today, I want you to think of as not hard and fast rules, but things to consider. Look at your particular business with someone like Rebecca and figure out, does this make sense for you? Where are those exceptions? Because there's always exceptions. Okay, I touched on maintenance earlier, but let's talk a little bit more about this. I think this is one of the biggest issues in the rental industry. Broken stuff costs money and it can cost a lot of money. So the best ways to rein it in is to stick to a maintenance schedule. So this depends on how items are used, how often items are used, and also what is the item. So for example, white folding chairs. These probably have to be cleaned every single time they go in the door, come back in the door. Whereas a black folding chair, maybe you can wait a little longer. If you don't clean the white folding chair every time they come in the door, they may look okay, but some of those stains are going to set in, and then when you do go to clean them, it's going to be really hard to get them out. So depending on the item, each item would have a different maintenance schedule, and this is where software or even a real fancy spreadsheet, if you're good at that, can come in handy to alert you. This is what we do for each item. Make sure that that you're following that schedule. So the next one is watch for damage trends. Look out for little things that can end up costing a lot of money. For example, I know one thing is like small tears and tents. This can be something that happens and it can be easy to repair if you catch it immediately. And it can cost you a lot of money if you don't catch it and it becomes a very big tear and you may end up even having to replace the tent. So watching out for those damage trends. And then training your team on how to handle items safely. Oh man, hiring people is really, really hard these days. And I know the pain of you hire somebody, you finally get them trained, they know how to do everything, and then they quit. So It is tedious. It's easy to fall back and say like, look, I just need some warm bodies in here. I got to get stuff in and out the door. But at least try to have one person, a manager or somebody that is trained on the proper handling and can oversee things. Even for the ones that haven't been trained, they can sit there and say, go do this, we got to do this next. Because things like, again, let's talk about tents. If the sidewalls aren't rolled up and stored properly, they won't last as long. Or for inflatables, my kids had a field day on Monday and I was out there and there were some inflatables out there. And by the time they finished, because these were water inflatables, we were in a field of mud. I mean, it looked like Woodstock, these kids. And they're all muddy and they're running back up that inflatable and coming down. And I started thinking about this webinar and thinking about that poor inflatable company. I mean, when that unit comes back, they have to clean that and let it dry before they properly store it. Or when it needs to go out again, it's going to be a real pain. So again, software or spreadsheet or somebody with a really great memory, not me, that can track all of this is super important, and less surprises does mean more money in your pocket. Okay, raising your average order value. I'm going to talk a little bit about pricing here and how to raise your average order value. And then Rebecca is going to dive into some more pricing stuff in just a minute that I was looking at her topics and I'm really excited to hear. But this is probably more from the marketing side of how to raise your average order value, and she's just going to talk more about the accounting side. So I think both are super important. So the first one is upselling, making suggestions for complementary items. My very favorite example of this, it's a really old example, is McDonald's. People used to go through the drive-through and order a cheeseburger, and that's all they would get. And then McDonald's did a big initiative to have their people at the drive-through taking the orders say, "Would you like fries with that?" And I think, I don't know the exact number, but their uptake rate was around 40% of people that started adding fries. And now you think, who gets a cheeseburger without fries? I mean, that seems like blasphemy to me, but um, trying to implement the same thing in your rental business. Always thinking about what else they may need that they're not thinking about. Obvious ones are like tables with linens. But what about napkins with linens? Are we saying, what about napkins? Do you need napkin dishes? Um, when somebody gets a chafing dishes, what about the serving tools? When they get tents, you probably are asking about walls. Chairs, you could be asking about cushions and covers. And then one that I like for the event industry in particular is always asking, do you need trash cans? Because trash cans are always forgotten. And if it's a larger event, they need trash cans. Um, Okay, next up is bundles. So bundles are fun because bundles get people to order more than they would probably order on their own. So um, an example is like a wedding essentials, everything you need for a wedding, you could bundle that together. This makes it easy for them to plan their wedding, but it also ensures that they're getting more things than maybe that they would think about on their own. So you could also offer packages that include everything you need for a tent bundle with 100 people. So this would be the tent, the tables, the chairs, the lighting. You could throw in other things in there. And now they're getting, I mean, this has happened to you before. You've gone to buy, like, I know with me on Amazon, like I go to buy something and then they're like, oh, you also need the batteries. And I end up buying the batteries, which I probably would have not otherwise bought the batteries. But I'm so happy to because it would really suck to get that item in, but not be able to immediately use it. So bundles is a better user experience and it also increases your average order value. Kind of in line with that too is tiered options. So when people come in and they say, I need chairs, having a basic or standard versus premium chair, you may have like a Chivari chair or a wood crossback chair versus a folding chair, and trying to upsell them on, which chair they're getting and why other ones are better. That's great for your people taking orders on the phone or talking, talking with people in your showroom. The next one is to require a delivery minimum. So this isn't for everybody. I mean, I love a delivery minimum if you're a thriving business and you have you only have so much labor and can only do so much. You want to make sure that you're using your labor for your most profitable orders. But there are times when maybe you're new to the industry that you don't have a delivery minimum so that you can get business that other people are turning away. Again, it's just something to consider. So, all of these things can significantly increase your average transaction with the delivery minimum. Let's say people are coming in and trying to order $200 orders, but you have a delivery minimum of 300. It's probably going to be pretty easy to bump them up to 300. So it just helps get that extra. So, yeah, raising your average order value, thinking about what people are purchasing, training your customer service representatives to make sure that they're suggesting other items, making sure nothing's left out. Okay, next up, ties into that delivery minimum, which I was just talking about. But let's talk about which jobs, knowing which jobs are worth it. So not all jobs are profitable. Some may just look like they're profitable. Sometimes a really big order seems like amazing, but then when you dive into the numbers and look at it, you barely broke even. So I like to think about businesses and really anything I'm doing. I always think about the Pareto principle. It's also known as the 80-20 rule. And it basically says that 80% of your results come from 20% of your efforts. So if you think about that, if you think about that in terms of marketing, usually if you think about where you're getting all of your business, probably 80% of it is coming from 20% of effort. Like you can probably real quickly be like, oh, I get 80% of my business from X. This applies to just about everything in life I've found. I mean, it's not exact. It's not always exactly 80-20, but it also applies to profitability. I've seen in my experience, and that's that 80% of your profits typically come from 20% of your customers. So your job is to figure out what those 20% of customers have in common that are contributing to that 80% of profits. So things to look at are breaking down costs by labor, mileage, setup, risk even. Compare margins by job type. So for example, you may compare a large tent order to a smaller standard and table chair order. Which one makes you more money? You may think, oh, the large tent order does because it was $7,000 versus this order was only $700. But when we're talking about profit margin, you may find out that your profit margin is higher on the small order or vice versa. And maybe you don't want to do the small orders anymore. So you really have to dig in and find out which ones are the best for you. And every business is different. It just really depends on strengths and weaknesses. But you want to compare, you break down the cost, compare by job type, and then use your profitability reports. Those of you using a spreadsheet, this is very DIY. You got to pull all the numbers, you got to start looking at them, really dig things out. The next step up from there is software that's going to give you a profitability report. It'll tell you like which items are most profitable, but you still got to do some work to really get your insights as far as jobs go. And then the creme de la creme option is to have an expert like Rebecca, who has experience, can look at your business in particular and tell you pretty quickly after looking at things, this is where you're making most of your profit. Of everything we talk about today, if you're going to take one thing out of it, this for me, this is what's been helped me be successful in my career is really figuring out the 20% that leads to 80% of my results. So this is where I really want to keep you focused. Okay, I think I'm going to talk about one more thing and then pass it over to Rebecca so you'll get to hear a better voice. The last one for, oops, not yet, Rebecca. I went too fast. Oh, I'm going the wrong way. Let's go back here. Expanding revenue streams. So the last little tidbit I'll give you here is don't just rent items, but build services around them. So two quick ways you probably already think about, but you may want to put some more effort into them. One, you're probably already doing value-added services like setup, breakdown, event consulting. And then the second one is referral partnerships with venues, caterers, planners. If they're giving you a referral fee, or even if they're not giving you a referral fee, but are throwing business your way, that can make a big difference. So these are low-cost ways to earn more without adding new gear. So now I'm going to turn it over to Rebecca. And like I mentioned, she regularly helps rental companies exclusively. She's a CPA that exclusively helps rental companies become more profitable.
Thanks, Candace. Those are so helpful and such great tips and things to help improve your rental business. So Candace did an excellent job of covering, a lot of the basics and things that we need to be looking at. So typically what we see in businesses generating at least $1 million in revenue, rental businesses, we see that they're quietly leaking about $20,000 a year. So Candace has done a great job of covering about half of the items that are different leaks and things that we see. And we're going to cover just a few more of these totally preventable and adjustable items so that you can make more money and then keep more of what you make, right? It's tough being a rental business, and we want to be as efficient as possible so that we can be as successful as possible. Okay, perfect. So the first thing that we're going to touch on is pricing that's stuck in the past. So we touched on a few different aspects of pricing, but what I want to focus on is that we should be increasing our pricing at least once a year, at least. So if you haven't done a price increase in the last 12 to 18 months, definitely consider it. A lot of markets, depending on what part of the country you're in, are heading into their busy season. So maybe now is not the time to do it, but as soon as we get back into that slow season again, let's look at it. And the best thing is if we're consistently doing these price increases, at least on an annual basis, they can be small. It doesn't have to be a 50% price increase. It can be 5, 10%, just a little bit year over year. Your costs are going to continue to go up. Your labor costs, we've got inflation, all of those things, delivery, fuel, all of that is continuing to raise. And so you've got to keep raising your prices to catch up. You don't want to get 5 years down the line and be like, oh goodness, I should have raised my prices and now I'm so far behind. And then also some of the things that Candace was also touching on, you want to take a look at your numbers, look at your reports. If you happen to be doing things on Excel, you might have to get a little bit more creative where you're pulling information on. But let's make money on every item that's not a loss leader, or figure out ways to put those into the bundles and different things like that so that we can make money. If you've got items that aren't making you money, she talked about that 30% utilization. Maybe that's something that we don't need taking up space in our warehouse. And then communicate that to customers. Ideally, if you can, especially with your relationships, right? Your event planners and venues and things like that. If you can communicate that up front to them, then the price increase isn't going to be a surprise, and they've got some time to stomach it. If you can let them know like 30 days in advance, hey, on July 1, we're going to be increasing our price to X. That way people have time to plan for it. And your best clients are going to understand that you need to raise prices to continue to be successful. So those ideal clients and clients who understand how a business is ran are going to understand that. Okay, so the next thing that we're going to look at is guessing your numbers, right? One of the things I like to call this is I call it bank account bookkeeping. So when you look at your bank account and you pull up the balance on your app on your phone, and you're like, okay, it's, whatever number, and I'm happy today, or it's, this other number, this lower number, and I'm not happy, and I feel like the business isn't successful. That's not a great way of judging the success of the business. So what you want to do is have some sort of reports. Ideally, you want to be using an accounting software in addition to your rental software to look at those reports, right? So we want to look at how much you're making, how much you're saving, how much you're spending, maybe what your debt payments are on items that you've purchased. And if you can, look at those reports every month, get an idea of where the business is. Don't just look at your bank account and see where you're at. And then if possible, because look, not everybody is a numbers person, right? I get that. If possible, you want to work with somebody who understands those numbers, but understands the rental industry and can help explain to you what all those numbers are saying. And then a great thing is you want software that you can access from anytime, any place, both on your rental side and your accounting side. You should always be able to access it. look, we want you to be able to go on vacation too, but maybe you can still keep tabs on your business while you're, in Hawaii or wherever your lovely vacation is. And then a key thing is keep your business and your personal money separate. It's going to make it so much easier to run the business. We're going to have a separate business bank account and credit card over here. And we've got our personal business bank account and credit card over here. We don't want to mix those things together because then it's just going to be a jumbled mess. All your numbers are going to be off. Your reports are going to be off. So let's have this bubble over here working. And then we've got our personal bubble here as well. And then when you're looking at those numbers, ask questions until it makes sense. Don't be afraid to dig in deeper or ask your advisor or things like that. Make sure that it's something that you understand and that you walk away understanding that. Like, look, Candace was mentioning the utilization rate before. And my eyes get a little glossy too when people start talking about formulas and different things like that. But they are important things for us to look at so that we can better operate our business and make the best strategic decisions, right? What we want to do is rent out the items that are making us the most money as often as possible. That's what's going to help us be as successful as possible. Okay, perfect. So let's take a look at the next slide, which is wasted payroll. So payroll is a huge cost for rental stores. Ideally, we want it to be 30% of revenue or less. That's the goal here, right? So if possible, that's what we want to do. We know that it can be a little bit higher on the event side versus like the tool and equipment side. But those numbers should kind of go hand in hand, right? So a few things that we want to do is have clear roles and responsibilities, right? What do we expect our delivery driver team to do versus our warehouse team versus the maintenance team? Make sure that everybody understands what they're supposed to do and what is expected of them that determines their success, right? Then the next thing is we want to somehow tie that labor time to the job that they're doing. Because like example that Candace was sharing with, maybe you have a tent job that is a great job that you go out and do and you rent this big tent and it's a $5,000 deal, or you can do, 3 or 4 $1,000 deals where it's like the quick and easy tables and chairs where it doesn't require as much setup. We want to see which of those jobs or that combination of jobs we're making more money on based on including that labor information. And then almost all of our businesses are going to be on a seasonal basis, right? So have some sort of strategy, whether you just hire seasonally and that the expectation is that they're just going to be on for part of the year, or we do our big projects during the off season, right? So major maintenance, cleaning everything in the warehouse, organizing, getting rid of items that we don't need. Make sure that we've got something like that. And then use some sort of, in addition to KPIs, there's other things that you can do. One of my favorites from the rental boys out in Texas is a driver efficiency score. So they have set up a scoring system where the drivers and everybody, they have a warehouse score. Everybody in the organization has a score of how efficient they are being. And they've got an expectation of what that number needs to meet for like minimum expectations, and then going above and beyond when that number is higher. So it's really cool to put that into a number format so that everybody knows how they're doing and what the expectations are. And if that's something that you want to look into, we can certainly chat about that further as well. Okay, now we've got one bonus tip that I definitely wanted to share with you because it's a key one, and it can kind of make or break a rental store in a hurry, and that's sales tax. Sales tax is a huge thing. I'm based in the state of Nevada. We've got customers all over the country, but in the state of Nevada, we don't have state income tax, but we have sales tax. And you are much more likely to get audited by the Nevada Sales Tax Division, even more than the IRS. And that's what most states are doing, right? States need money. And so they're going to use sales tax as a way to collect that money. And sales tax is an easy thing to get mixed up. In Nevada and some other states, like depending on how you break out an invoice, you may or may not have to charge sales tax on delivery fee. You could be delivering to two different sides of the street and be in two different sales tax jurisdictions. So make sure that you are using some sort of software or good system to help track your sales tax. Make sure that you're collecting it from the customers so that you can remit it, because sales tax is it's just a pass through, right? It's not actually a tax on you. It's a tax on the customer that you're just passing through to the state and local jurisdiction. So make sure that you're being as compliant with that as possible to keep you out of hot water. We don't want to have a sales tax audit where they come in. When the sales tax audit happens, they don't let you go back to your customers and collect that money from them that you didn't get at the time. The bill is on you, and you've got no ability to really go back to those customers and collect. So make sure that you're staying compliant, that you're staying on top of it. Make sure that you've got calendar reminders so that you submit that every month or quarter or whatever the basis is. And ideally, I highly recommend, and even QuickBooks can do this, but TapGoods is really great at it, is use a software to help you with sales tax. There's over 30,000 different sales tax jurisdictions in the state or in the country. And so it's really easy to mess it up. So you want to use a software like TapGoods that's going to really just make that so easy for you. Okay, awesome. Well, I'm so glad that I got to share a few tips with you and all the lovely things that Candace shared. And I think we're going to open it up for Q&A. Is that right?
Yes, that is correct. Thank you, Candace and Rebecca. We really recommend Rebecca and her team at the Warnick Group if you need a CPA. And now we did have a couple questions come in. So the first one is going to be for Rebecca. How often do you meet with rental businesses and find that they really are losing a significant amount of money? Would it be possible for you to share an example?
Yeah, absolutely. It can be quite common, and we see it different things, right? Generally, our most successful rental businesses have been in business for a number of years, or they're a quick startup and they found a great way to gain traction. We do have one client, though, that got in a bit of a trap of they had purchased a business recently. They brought in this high-priced consultant that was going to help them grow and improve their business and things like that. And the bill was about $90,000 that they paid this consultant, and they had no money back guarantee and no way to cancel that agreement sooner. So we want to make sure that you're avoiding traps like that. If you're working with somebody who is going to help you with the industry and with your business, make sure that they've got a money back guarantee, a shorter contract agreement, so that you can really make sure that you're not locking away a lot of your money on something that that isn't going to pay off in the end.
Awesome. The next one is, when it comes to raising prices, do you think that I'll run the risk of turning away potential customers?
It certainly can happen, right? And look, as a customer perspective, I don't love a raised price either. Like, nobody wants the prices to increase, but we all understand that that's part of reality. And so I think if you can do those small incremental increases every year, where it's a smaller percentage that's a lot more palatable, and then the big thing is communicate that, right? Communicate it to your relationships, to your recurring customers, to those people that are going to take note. But then also understand, I think that's that 80-20 principle that Candace was mentioning. Your customers should want you to be successful too, and understand that, look, you're not out there just trying to price gouge or anything like that, but you are trying to make sure that this very challenging business that you have is going to be successful.
Awesome. And then the next one is, how can technology or automation, like inventory software or dynamic pricing tools, help boost profitability without adding to your headcount? So as far as like employees go.
Yeah. Is that a question you want me to answer, or Candace, do you want to answer that one?
Either one. I mean,
Okay.
I'll take it. Yeah, I'll take that one. I mean, it just goes back to, like, think about if you want to institute some of these dynamic pricing, you want to charge a different rate at this time or that time, or 3 days is different than one day, a month is different than 4 weeks. When somebody's taking an order, they have to be trained on all those different ways that you want to price, and then they have to do it correctly. So you probably have to spreadsheet, and they have to remember to do it. Whereas if you have some technology, some software, you can just use the tool, set up all your rules of how you want pricing to work. Now they're just putting in the order and the software is going, oh, it meets these requirements. That's actually a month pricing. We're going to automatically use that pricing versus another pricing. Or we never charge rent on Sundays because we're closed. So that's automatically going to be taken out. So now think about that employee. They're going to work 8 hours a day doing other activities that a software can't do. And so it just makes people more efficient. I think it makes you more efficient, but I think even more in my experience, it reduces errors.
Awesome. And then we have one more question, and that is, what key financial metric should I track monthly to spot margin erosion early?
Oh, that's a good question. So your biggest costs are going to be labor after rent, right? So the biggest costs are going to be your location, most likely, your labor, and then of course the equipment, right? Which is either like the financing or the purchase and things like that. So I would actually look at those three things. Labor is a hard thing. It's not something necessarily that you can quickly change. Rent is locked in on a very consistent basis either, or as well, and so is your equipment. So but you're still going to have to keep an eye on those three things because they're your biggest costs and they're the things that are going to eat up as fast as possible. But I think a common one that we see too is marketing. Be careful with your marketing efforts that it's not something that is costing a lot of money but not coming up with results. You want to make sure that you're tracking your marketing and comparing the cost with the bookings that you're actually getting from it to make sure that it is effective. Same thing with like various consultants and software subscriptions and things like that. Make sure that it's something that's making you money. But one thing that I wanted to mention, we didn't really go too deep into it, is software can replace the people as well, right? So, the online booking system where your website is available for people to be shopping while you're sleeping, while you're on vacation, while it's the weekend or after hours. I think that that's a great thing that isn't a huge cost, and you might not notice it as much, but that can help boost your revenue too, while and not having a very active role of employees by having something that's working while you're not.
I want to ask you a question. And I want to piggyback on something that you said, Rebecca. For marketing in particular, for your Google ads, I see people just have like they're like, oh, I have $1,000 a month budget, and they just kind of use it across the whole account. But you mentioned like drilling in, and you may find that an ad for tables, is costing you $20 to convert it, and your average order on that is only $200. But a tent ad, maybe it's costing you $40, but your average order is 1,000 or 5,000. You have to look at all these ads and split it up. So you don't want to just look at it as a whole. And we did a whole webinar on Google Ads. We can share that with you. But you don't want to look at it as a whole and go, this marketing doesn't work. You have to start breaking it out. And then that leads to my question for you, Rebecca. And sorry to put you on the spot here, but I was just thinking through it as you were talking. You talked about these three big things. You talked about inventory financing, labor, and rent. How do you look at those on like a per job basis? Like, is it like do you have a percentage overhead that you apply to each one? How do you account for that when you're really trying to break it out on a per job basis?
Yeah. The labor, you want to use a software, right? And break that down as much or track their hours and different things like that, right? Because a job that takes 2 hours to set up and travel to and stuff versus a job that takes 30 minutes is going to be a huge different number. So that one I think is not the hardest to break down. Now, maybe you have the overhead labor too of like you and the office staff and management. So you can take that whole thing and take it into, like a per minute number that you could put together. Same thing with like the warehouse space. And maybe you want to look at something where, let's say, for example, like a table is going to take up a fair amount of space, right? It's not as small as a linen, but it rents for a much higher rate. So you could take your overall warehouse space and break that down based on how much space each item takes up. So, you might have some compact item that rents for a really amazing price that doesn't have a very high rent or warehouse factor that goes onto it, or even things that can be stored outside, or in, a cheap warehouse space versus like a nice indoor clean space. Those should have different factors as well. And then obviously with the equipment, you want to look at like the purchase price. So how much did the equipment cost? And then if you decided to finance it, how does that work? How does that add into the calculation of looking at those three factors?
And so, Rebecca, if this is something I'm just thinking about, like if I came to you and decided to work with you for a rental business, do you already have a lot of these like formats and spreadsheets that because we're saying all this thing and I'm thinking as I'm thinking of it as a business owner and I'm coming to this webinar and what I would be feeling right now is like that's all good and dandy, but I don't even know where to get started. Like, do you have templates and ways to be like, okay, here, use this to track this, and here's how you break down that labor. Here's how you find out your overhead. I mean, are you kind of taking people on a journey through this stuff?
Yeah, absolutely. And the big thing is too, your rental software is going to have the ability to house a lot of that data. So the better software you have, the better you're going to be able to pull information out of that. So talking about looking at these numbers and stuff is going to be much, much more difficult to do in something like Excel than in an advanced software like TapGoods, where a lot of that reportability is already there available for you. Now, that doesn't mean that without a software, we can't get it done, but it's going to be a lot more manual trying to pull things together. And at the end of the day, it's going to be some kind of guesswork things too. I
Mhm.
think one of the other cool things, since we just work with rental stores day in and day out, we've got kind of our key numbers and things that we look at. We call them like KPIs, key performance indicators, key numbers that we're going to look at and kind of compare you to. And then when we're looking at, for example, let's say maybe your marketing was like way out of proportion or above that number, we're going to look at you and be like, okay, like what's going on? That's how we discovered that thing about that consultant is I was looking at their numbers and I'm like, who is this and why did they pay somebody so much more money? Right. And so you definitely want to be able to take a step back and look at that. And look, I get, Candace and I are talking about really drilling down and getting very nitty gritty, and it can be hard and overwhelming. You don't necessarily have to do that. It depends on what direction you want to go with the business and what your goals are. It's something certainly we can do. We've got the ability and we can show you how to break it down, but it's not something you have to do. I mean, the basic things of profitability on jobs, knowing what makes you money, tracking those kind of minimum things will be done, but you don't have to go really, really nitty gritty deep into the numbers. That's a choice that you can make.
Yeah, and I do think it's good, even if you're not, updating the spreadsheet on a weekly basis, just to stop and have that conversation and think about how much different things cost you. And, just as from the strategic level, it's super important. This was great. Thank you, Rebecca.
I have a couple of direct questions to me in the chat, if that's okay, if we can take another minute or two.
Sure.
Okay, so I have one question that says, can you separate a certain amount of labor that would be tax exempt? From Miss Lori here. So what I think that you're referring to is related to sales tax, right? And so generally the best thing that you're going to want to do with sales tax is break out your invoices as much as possible. So if you can, and if it makes sense to you, you want that labor cost included in there so that depending on what job you're doing, if that is the ability to make that labor component exempt from sales tax. Same thing with like the delivery fee. Depending on your jurisdiction, if that is broken out separate and can be a non-taxable sales tax item, you want to break that out as well. Maybe fuel goes a certain way, all of those things. So generally, the more detailed you are with the breakout for your sales tax, then you'll have a better ability to kind of pick and choose and allocate what is sales taxable on that jurisdiction, what is subject to sales tax, and what isn't. And Lori, of course, they're going to share with you my contact information. So if you've got any follow-up questions after this, we can definitely connect too.
Oh, yeah, I didn't even mention in the follow-up email, I'm sharing a link. You can book 30 minutes with Rebecca for free to discuss some of these. If you have, and we're so the follow-up email, we're going to have the slides, we're going to have that calculator where you can figure out what your minimum price should be. Really, anything that we mentioned today will have a link in addition to Rebecca's contact information and how to book time with her.
And a full recording of the webinar, right,
And a full
Candace?
recording, yes.
Yep. Cool.
All right. Well, thank you guys so much for attending today. I think we had a lot of great insights from both Candace and Rebecca. If you are currently a TapGoods user, you can contact your relationship manager or onboarding specialist, or you can even email our support if you have any questions or want to hear more about our reports and how you can use them to inform your decisions when it comes to profitability. We're always happy to bounce ideas and help you think outside of the box. But if you are in need of rental software, you can scan the QR code here with your phone or an iPad and check out everything we offer. TapGoods is a robust system and it lets you track all of your orders, inventory, routing, and even more. So you'll definitely want to check out everything we offer on our website. Once again, we're going to send out an email shortly with all the resources mentioned today. So don't worry about those notes. And this webinar will be posted on YouTube as well. So you'll get that. All right.
Thank you, everybody.
And for everyone coming, and thank you, Rebecca and Candace.
Thank you.
Thank you.